Good evening, everyone. This is Rodney with the Triton Wave Market Outlook for Monday, August 12th, 2013. And as always, this is brought to you by Triton Wave Consulting, which are early warning Triton waves that give market timing, that are market timing indicators that give you an advantage in all time frames in all markets. It's currently just after 5 p.m. Central Time, and the markets have opened. The S&Ps are down 175, gold's up $5 in the first 9 minutes of trading. But first, I wanted to show you what's going on in the ES. But even before that, to let you know that as I expand these, I want to tell you a little story that basically every year and a half or 2 years, I go through the waves and I get an epiphany about what should be happening with the waves vis-a-vis what trading is like and what the people that I advise are looking for. And where I found was that big moves like what's going on up here is, you can take positions in here when these waves, as long as these waves are above zero, but in reality, what's going on is the same thing that I've been showing you. And these are the new waves, that when you get higher highs on the prices up here, and this is basically like up. This last one is a 1272 extension of this wave right here. Of this price increase. We have increasingly smaller and smaller waves. They're increasingly smaller in size. And so I fully expect this to go down. And I'll give you the fundamental reasons as well in a minute. But just to let you know that this epiphany that I had and the change in the subsequent change in the waves were designed for smaller traders to make that are using smaller size contracts to make 2, 3, 4 points at a time rather than waiting for the big home run. So as you can see on the left-hand side, this is a continuous contract of the ES, and this whole move across here. Let me see where. Wait, hang on 1 second here. Okay, on the right-hand chart is a 987 tick chart on the ES that goes out to this hash mark here. So just keep in mind that this hash mark. Whoops, wrong one. Sorry about that. I'll get it right yet. Okay. So this hash mark in between here and here is like 3 days old, and that's what's going on the right-hand side. So since this is declining here, and since this is declining, and even more than that, on the 21-minute chart, we have all of these moves down. Well, first of all, we looked at the daily; it was going down, and now we're looking at the 21-minute chart going down here. This has been below zero, and this is heading below zero. So if we look at the 987, and we keep in mind and use this 21-minute as an anchor, these are very playable moves right here, and these are good for like 5 to 6 points apiece. Now you don't want to take the ones on the upside. It's more risky, and you have to know that you're only going to catch a small piece of it, but the main ones are the ones going down here, this piece here, and now right here, this piece right here. We're currently down 175 on the S&Ps. Just wanted to show you how these new waves are working for smaller traders. Okay, I also wanted to do a slight tutorial on gold to show you the new stuff, how the new waves affect gold. Okay, so on the left-hand chart we see gold, and this is the electronic. Let me see. This is the electronic only, so it has no gaps in the data, which I found that the spot prices in combination with the electronic did. So I want to show you what's happening here. Is that we had this big chunk going down on since December. Now this is the first time this wave, and it happened today, right at 5 o'clock, on the opening, that this is showing any signs of going up on the short term. But this whole period of the downside, I want to show you in a smaller time frame exactly what was going on. So if we turn to a 21, let me see, is it the 97? Okay, hang on, I wanted to show you the 9, hang on one second. Okay, so let's look at gold. We already saw that gold is at an inflection point. Looks like it wants to go up a little bit, and it's up right now 570. But big picture, I'm looking at in terms of historical background. This is the 987 tick chart. Now, from here to here, this is about. Let me just go back 1 second and see how many days that is. Okay, so this is actually just a 2-day period. So on the 987, we have the T1 crossing right about 1309, and then crossing back above right here at about 1280. So let's see what happened on the tick chart from that point on. You can see I have simultaneous cursors on both screens, so you can see. You just follow this right here. In fact, I will put a let me put a marker up there so you can see it really plainly. Bing, and I'll edit, make it yellow. Okay, so you can see when I'm moving this cursor across that's where it starts, and this is where it ends 2 days later. So we're using the 987 as an anchor, and I want to go back here and show you what's going on here. And these, with the advantage of the new waves, they're not new, but they're adjustments to what I've been doing for a year and a half, and I've been back testing them for the last 10 days, and they're really, really, really amazing. Okay, so here's where we're starting, and the first time that the 144, which I hadn't been using before, goes down below zero, you can grab this one until it goes above zero. Now you don't want to play this one. That's an X, because you're going against the grain. But you can take this one here and get this chunk. You don't want to play this one, but you want to play the next one as it comes back up here. So let's move the screen across, and as it moves down here, you've got a big piece of that. When it moves down here, you're only taking the ones on the downside. This one crosses just not at the peak, but here. They're all good for like 3 to 5 points a piece. But here you've got to catch this really quickly, and then you just put it in for 3 to 5 points. You don't try to get greedy. And each one of these over a 2-day period, and we still haven't reached this bottom yet when the 987 turns. So we can just keep going across the screen here, and this one comes down 3 to 5 points. This one comes down 3 to 5 points. Now we've come to the end right here. So then we start looking the other way, and when it starts going up the other way, then we only buy the ones that are going up. We don't buy the ones that are going down, and so on and so forth. So I'm really happy with this new new permutation of waves that I just decided after a year and a half, I just looked at it differently, and it just came to me. So now we're looking at this moving. Right now, it's kind of a little bit indecisive because the 987 is right here below zero, and on T1, and T2 is slightly below zero. So even though this has made this tremendous run up here, I want to wait and see whether this T2 holds below zero before I start getting comfortable. But you can take counter trend trades if you're only looking for 2 points. So this one opened up here at 5 o'clock and started, like just shot up through the roof. So you really can't do anything about that now. But I want to wait and see if this comes back up and then comes back down. Then because this is below zero and this is below zero on the left-hand chart, T1, T2, then as my anchor, then I would be looking to take this out. So this is what I do for traders that I work with. Okay, let's take a look at the ES again, and what I wanted to tell you on a fundamental basis, some technical, some fundamental, is that the PE ratios that everybody's looking at, that they all talk about on CNBC and what corporations talk about, are trailing 12-month PEs, and so it actually starts looking good if you look at the move, and people say, well, they're 16 and they could go to 26, so this could just like shoot through the roof. Okay, the more accurate ones that people have been using, the technocrats, people who are really oriented toward technical analysis, are using what's called the Shiller PE. And the Shiller PE is an average inflation-adjusted earnings picture for the past 10 years. And right now, the PE, the Shiller PE is sitting at 29 PE. So it's sitting at 26 PE. Okay, just for your own edification, in August of 1929, the Shiller price PE was 24.4, which is 1.6 lower than it is right now. And it is higher than it was in December 72 after the 2-year plunge. Just before the start of the 2-year plunge, and it is higher now than it was in August 87 before the complete 20% debacle in a very short period of time. Everybody who knows history knows about August 87 that went into October. So here we are, and almost all the time, a Shiller PE of 24, 25, 26 in the area that we're in has led to a 50% retracement. So what are the possibilities here? I don't mean to scare you, but let's look at the possibilities here. When we look at and see what happened in this area back in let me see when this was. Hang on, I'm gonna move my graph over a little bit. This was July of 2011. Okay, this area was April of 2012. This was December 2012. But if you want to look at the really big ones, you have to go back to 2008. So let's look at the possibilities of what's here. Let's actually get this on a weekly chart so we can no, I don't have a hell of a lot of data on this weekly one, but we'll go with what I have. Alright, so if we look at a Fibonacci retracement, If we look at a Fibonacci retracement to this area right here, which is December 2011, we get a fib retracement of back in 50% is back into 1388 area. If we look at a fib retracement back all the way to the beginning of this move, then we end up at 1195, 1200, which is kind of like splits the difference of every single one of these moves in. Okay, so 1200 is right about here. In this move, 1200 is right about in here. In this move, 1200 is right about in here, and the same here. So basically, you're coming back to the mean. It's not unlikely that this is going to happen, and it's going to rip your head off. All right, so that's the long-term forecast that I see. That may not be long-term. It may all happen in 6 to 12 weeks. Okay, let's look at Apple. Apple is coming down to one of these support lines, the exponential moving averages. I think this is the 144, and it's taken some off the top coming down here. It looks like it wants to head back into where is support and resistance here? Probably at least a 50. Well, it's only 4 points away, 450, 452. But it actually may come down to this gap area down in here, 440. But let's look at a smaller time frame chart here. The 21. Let's see what that's doing. And these, again, these are the new waves that I am showing to you, and that's actually not a good representation. All right, so the orientation toward Apple is to the upside since May, since it started going up here, and even when it came down here and touched this, I think this is the 987 exponential moving average. It took off on the waves, on the daily waves. So to look back, and we can see in the short term, using daily as an anchor, we'll use the 610. So all you want is up moves on Apple. So here, the new waves, take that right in here, right at about 440, and you ride it up until the wave comes down. So you're in for, I don't know, I think this is like a day and a half from 440 up to 450. Nice option play, nice stock play. Again, upside, bing. Until this comes down here, you're in it for about 20 points. So right now, if you're playing this on the downside because T2 and T3 are going down, that's okay. You just need to know that you're playing it for smaller gains, because against the daily, this is a counter trend trade. So this right now is a counter trend trade, and it looks like it wants to go up, but it also, in the very short term, it looks like it wants to go down. So you have to be careful on the downside, not so careful on the upside. In light of the fact that the S&Ps have a bigger picture down, Apple may not be so independent and go up. It may go down with the market. So this could all change. The picture of this could all change because the 21 is now moving on the 21-minute chart. These are all moving down like that, and this actually went down for the first time since the beginning of July. So actually, I just changed my mind on that. Okay, so this is going down to 440. After that, we'll have to look at the daily and see if the daily is still capturing it to the upside or not. Okay, that's all I have. Okay, so since I started this video, which was about half an hour ago, just when we were looking at the 144 tick chart on gold, and this was the click right at 5 o'clock right here, and this went above zero right here, and in the last 20 minutes it's up 17 points from the opening. $17. That's $1,700 a contract. If you're trading 2 contracts, half an hour you made $3,400. If you're a bigger trader, then you made even more. So just to let you know how these new waves are working and how it can increase your own portfolio. So again, I am Rodney Julian, and this is I am Triton Wave Consulting, and my email is tritonwaveguy@gmail.com. If you want to become an exclusive member of this trading club, please email me, and I'll send you the details of how to trade along with me. And let's start increasing your portfolio with these new waves for smaller and larger traders. Have a good evening and good luck trading.